You've got questions? Well, we have the man to answer those questions, Jeffrey Levine from Buckingham. Jeffrey, welcome back to another episode of Ask the Hammer.
Always a fun time to be with you, Bob.
So much fun. And I have a fun question for you. It goes
All
like
right.
this. Yeah, right up your alley. It's tax related. What could go wrong? And you can't answer, it depends. I'm just kidding. Goes like this. What are some tax moves to consider now before the 2017 cuts expire?
Well, Bob, that's a great question because when we look at what's going to happen here, sort of at the end of 2025, going into 2026, a lot of the changes that were made to the individual income tax part of the tax code are set to expire here. Things like the higher standard deduction or changes to a number of credits and elimination of the QBI deduction. So many changes that created a lower tax bill for most people, not all, but for most people are set to expire, which means to a large degree, most people will have higher tax bills in 2026 than they would otherwise have if the rules were extended. Few thoughts. Well, one is when it comes to tax policy, I know a lot of people are saying, well, they'll extend these and they'll stick around because a lot of times that is what Congress does. But there's a lot of people who don't want to see these things extended. And so it's largely going to depend on next year's election. That's really going to have a huge impact. And since we won't know what that's going to look like for quite a period of time yet, it's important to take advantage of today's rules while we know they exist. So maybe that means pulling in more income into current years. Could be through Roth conversions, or maybe it's just pushing off certain deductions that you otherwise might have. So maybe you've committed to a $25,000 pledge at a university, let's say, to help fulfill their endowment. Well, if you have some period of time in which you can satisfy it, maybe it makes sense to hold off and wait to satisfy that until 2026, when it will be worth more to you potentially because your tax rate will be higher. All of these things have to be looked at. But at the end of the day, Bob, if we have lower tax rates today than in the future, you generally want to pull in income and push out deductions. Now, for the minority of individuals, but it's large when we're looking at total numbers, a large minority of the people who will go the other way, who will have lower taxes after these changes revert. In other words, the Tax Cut and Jobs Act did them no favors. They are a minority of taxpayers, but again, a significant percentage. Well, they want to do the opposite. They probably want to pull deductions forward to today to offset today's relatively higher tax rate, and then look in the future at pushing out income into 2026 and future years. Maybe that means doing Roth conversions down the road, or doing 401k salary deferrals today, but Roth salary deferrals once 2026 comes along. Unfortunately, there's no one answer, and I won't use that word. It makes a difference based on your particular set of facts and circumstances, and there's no substitute for looking at it through only your eyes and your set of facts and circumstances. You just can't do it otherwise.
Yeah. Well, I would love for people to send us more facts and circumstances, because I don't mind it when you answer it depends, because so much about money does depend on
it would be very boring, right, if everybody had the same answer. I mean, what would we sit here and talk about all day, Bob, when we're not doing this, right?
I don't know, the Pittsburgh Steelers or never mind.
All right, that would be kind of fun. I can't go wrong with that. I mean, yes, there it is. Okay, so what are we talking about? We're talking about you sending us your questions. So Bob and I don't have to fill the time like this. We can actually just spend it reading your questions and answering them. To do that and shut us up, email us at askthehammer@buckinghamgroup.com. Again, that's askthehammer@buckinghamgroup.com. And we promise to talk about your questions and not my beloved Steelers.